In this video, I'm going to demonstrate ABC costing using problem 962 and 963 as an example. This company has two different product lines, Standard and Deluxe, and they've given us a variety of cost-related and activity-related information for both of those product lines. The company finds themselves as a limit. Standard is a no-frills product, and they feel like they're pricing it reasonable, a very slim margin, and it's not selling as well as they anticipated. Deluxe is a more premium product, and they've even increased the price on it, and it's selling much better than anticipated. So they believe that they have some issues with their costing system, and they have an intern that they've said, hey, here's a good summer project for you. Why don't you explore some alternative costing systems to what they currently do? Now, the starting point is what they do currently, and currently they apply overhead based on one predetermined overhead rate, so a plant-wide predetermined overhead rate based upon machine hours. B says, well, get the intern to explore using ABC or activity-based costing, and the intern's already broken that down into overall overhead, what they believe are the activities that support that, and that's receiving, manufacturing, machine setup, and shipping. So our starting point is simply just the plant-wide predetermined overhead rate that they're using currently based upon machine hours. So I'm simply totaling up the overhead costs, $600,000 for receiving, $5.5 million for manufacturing, $900,000 for machine setup, and $1 million for shipping. We're dividing that by the activity level, which they've defined as machine hours. So 150,000 machine hours for standard, 100,000 machine hours for deluxe. That's 250,000 machine hours total. Divide that into the $8 million in manufacturing overhead, and they get a plant-wide predetermined overhead rate of $32 per machine hours. So if we want to calculate our unit cost for standard, we'll start with our direct cost first. I combine those together. $245,000 in direct material costs for standard, $650,000 in direct labor costs for standard is $895,000 in direct costs. We're going to apply overhead based upon our $32 per machine hour times 150,000 machine hours for standard is $4,800,000 in overhead we're going to apply to standard. Add that to our direct cost of $895,000, and we get total cost assigned to standard of $5,695,000. Divide that by the number of units produced, which here is shown as 20,000, and we get an average unit cost for standard of $284.75, again based upon our current costing system. Now I'm not going to demonstrate deluxe for two different purposes. One, to keep the video as short as possible, just to get you started, and then also for you to be able to use on your own to make sure that you're calculating this correctly on your own. What I'm going to do is shift into B, where the intern has suggested using ABC costing, and again, broken down the larger manufacturing overhead pool into smaller pools or activities that they believe are really driving the business. Also identified the drivers for those individual pools being direct material costs for receiving. The manufacturer and production oriented still believe that that's driven by machine hours. Machine setup is driven by production runs, or in essence, the number of setups, and shipping is based upon the unit shipped. Now, our direct costs aren't going to change. That's the same. We're just changing the way that we're applying overhead. So we're going to do these one by one for overhead. Receiving is $600,000 overhead related costs related to receiving, divided by direct material cost, which is $245,000 for standard, $155,000 for deluxe, that's $400,000 total. Divide that into $600,000, and we get a rate for receiving of $150,000 per direct material cost. 150% times direct material costs for standard of $245,000 is we're applying receiving related overhead to standard of $367,500. Manufacturing, instead of the all $8 million, we only apply $5.5 million, divided again by the machine hours, 250,000 total, 150,000 for standard, 100,000 for deluxe, is a revised rate of $22 per machine hour. $22 per machine hour times 150,000 machine hours for standard is 3.3 million in manufacturing related overhead applied to standard. Machine setups, 900,000 divided by the combination of setups, which is 75 for standard and 125 for deluxe. That's 200 total. Divide that again into the $900,000 cost, and we get 4,500,000 for production run. 4,500 per production run. 4,500 per production run times 75 production runs for standard is 337,500 in machine setup related overhead applied to standard. Last category I promise, shipping of $1 million divided by the combination of units shipped of 20,000 for standard, 5,000 for deluxe, that's 25,000 total. Again, 25,000 divided into $1 million is $40 per unit shipped. $40 per unit shipped times 20,000 standard shipped is 800,000 we're applying in shipping related overhead to standard. Adding that all up, direct cost of $895, receiving related overhead of $367,500, manufacturing related overhead of $3.3 million, machine setup related overhead of $337,500, shipping related overhead of $8 million. We have total cost assigned to standard of $5.7 million. Divide that by the number of units produced and shipped, 20,000, and we get an average unit cost of $285. So before I do a comparison, I just want to point something out here that when you look at this, standards activity compared to deluxe, for most things, like its receiving, its manufacturing, and its shipping is more driven to standard. So we assume we're going to apply more of that to standard. The only thing that shifts around is our machine setup, which we have more that's going to get applied to deluxe, but that's a fairly small amount of the overhead. Because of that, at the end of the day, we didn't really change the overall average unit cost much. Again, most of the things we were applying still a heavier amount went to our standard product compared to our deluxe. There was only one item where it shifted around, and it just didn't make that much of a difference. Unit cost under the plant-wide predetermined overhead rate with machine hours is $284.75. It actually increased under ABC to 285, so it went the opposite direction of what we anticipated. So, I don't want to say just scrap everything. What I want to say here is maybe I didn't get the right cost pools. Maybe I need to still continue working on this and break them down a little bit more. So we have another alternative in problem 963. The internist says, this category of manufacturing of 5.5 million, that's too broad. Really, it encompasses two different activities. Production, which is driven by machine hours, and that's 3.3 million, but there's also a significant category of cost of engineering, and that's 2.2 million, and that's related to engineering changes, design modifications, and that's based upon setup. So let's try to reapply this. The good news is that we don't have to lose everything. Our direct cost, our receiving related overhead, our machine setup related overhead, and our shipping related overhead stay exactly the same. We just focus on what's changing. Our manufacturing related overhead, we keep bringing that cost down. It started as 8 million total. It went to 5.5 million in individual cost pool. Now we're bringing it down to 3.3 million. Divide that by our machine hours of 250,000 total is now a revised rate for manufacturing related overhead of 1320. 1320 times 150,000 hours for standard is 1,980,000 of manufacturing related overhead we're going to apply to standard. Engineering, new category, 2.2 million divided by the setups, which is 75 for standard, 125 deluxe, that's 200 total, divided into that $2.2 million is a whopping $11,000 per setup. $11,000 per setup times 75 setups for standard is a engineering related overhead of $825,000. Adding up all those revised costs, we come to a total cost for standard of $5,205,000 divided by the 20,000 units produced, and we get a unit cost of $260.25. So if I compare all of these, plant-wide predetermined overhead rate, average cost 284.75, shift to ABC with only these four cost pools, we get 285. It moved in the opposite direction of what we anticipated, so we don't feel like that was a more accurate. But when we adjust this manufacturing cost pool into two separate cost pool, we feel like we're on the right path. We actually decreased the unit cost. And again, this goes more to our assumption that we were originally over costing our standard product. We were applying too much overhead. And perhaps now that we've broken it down into five cost pools, receiving, manufacturing, engineering, machine setup, and shipping, we are on the right path to costing this correctly.